Income tax 2020, tax software example, charitable contributions if you take the standard deduction. Come in, relax with income tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software in order to follow along, but I do think they offer a 30-day free trial, so if you can get access to a demo version of it to practice, it might be a good tool to be practicing with. In any case, we'll be taking a look at the Form 1040, jumping back and forth from the data input to the software so we can run different scenarios with it, the tax software making it a bit easier for us to do that. So we have our Eric Smith starting off in our starting point, single filer. He lives in Beverly Hills 90210. And we have the W-2 income at the $100,000, standard deduction for a single tax filer $12,400. That gives us the taxable income $87,600. Seeing that then on our tax worksheet, same thing, mirroring the information here. Now it's mirroring it. I made a slight adjustment there. So now $100,000, we got the $12,400 standard deduction giving us the $87,600 taxable income. So that's going to be our starting point. Now we're looking for the charitable contributions. Now remember, normally the charitable contributions would be on the Schedule A here. So Schedule A, you'd have the gifts to charity, the charitable contributions would be here. But notice the Schedule A is grayed out because you would only be taking the Schedule A deductions if they were greater than the standard deduction. So if I went back up top, and that would mean we would need charitable contributions, or not just charitable, but we would need itemized deductions over, in this case, $12,400 before they would be something that would be beneficial to us. Now, for people that do not itemize, and that would, of course, change based on filing status. So $12,400 for single, $24,800 married, $18,650 for head of household, and so on for the filing statuses as to whether you would take the standard or itemized. Now, if you're not over that threshold, then you could still, at this point, take a deduction, which would be an above-the-line type of deduction, a deduction for adjusted gross income, which would be here on line 10B. Now, it's a little bit strange here because usually these would be on Schedule 1. These are usually Schedule 1 deductions on Part 2, adjustments to income, where we look at all these adjustments that are above-the-line deductions that would then sum up and then go to page 1 of the 1040. For some reason, they kind of carved out another spot right on the first page of the 1040, but it's in basically the same area that's going to be an above-the-line type of deduction. In essence, it's going to have an impact on the adjusted gross income. So I'm going to go ahead and jump to that. If I jump to that from here, let's see if they give me the jumping option. Jump to the data input. Now notice where this particular tax software put it. It's going to be different depending on the tax software that you will use, but they may well use this convention because notice right here, it's under the itemized deductions. So they put it under itemized deductions here, and that would be normally on a Schedule A, but then you got this option to say, hey, I'm going to force the standardization of this. So if I click this, it's going to force it to basically take the standardized deduction for the charitable contribution. So for example, if I put like, let's say 1,000 here, put 1,000 here, and I don't click this checkbox, and then I go to the forms, it's going to put it where the itemized deductions would go for charitable contributions. That would be on Schedule A. There it is on Schedule A. But because it's all I have right now, and my itemized deductions summed up do not add up to more than the standard deduction, which if I go to the Form 1040, that $12,004, I'm not getting any benefit from that there. So I'd like to say, okay, since I'm not itemizing, I want to put it right there. That's where I want it, because that might help me. So I'm going to go back on up top, and we're going to say, I would like to say, take it on this one, deduct charitable contributions if taking the standard deduction, which forces the standard deduction, they're saying here. I'm going to say, okay, force the standard deduction, and there it is. So there's the $300, and that would then have an impact on the adjusted gross income. Now it's capped, you'll see, at that $300. So now it's capped at the $300, even though I input $1,000, because that's going to be the cap. If I put that in my tax worksheet adjustment here, I'd want it still in the adjustments to income. So I'd go to the adjustments to income line, and I'm going to add one for charitable contributions. I'm just going to insert and say charitable contributions. And I'm going to type it as I say it too. I'm typing it and saying it at the same time. Multitasking. And then there's the 300. And then if I pull that on over, then it's going to pull over here. Now, you might, if you had this information, you could start using fancy formulas on these worksheets and say, put in 1,000 and say it's an if-then formula if it's over 300 to show the caps on it. So you could make a fancier worksheet if you wanted to kind of put that more information and notes into your worksheet like this. But in any case, there's the 100,000 minus the 300. That gives us the 99.7 for the adjustment. For the adjusted gross income, we've got the 12,004 on the standard deduction. That gives us the 87,300 for the taxable income. Okay, so let's go back on over and say that's what we have here too. So let's say, what if we were married? Can I get more of that 300? Is it still going to cap me at 300, or should I get 600? I would think you should get 600, but no, I think they're still going to cap it at the 300, even if married, which is kind of strange. I don't understand it really, but let's check it out just to see if that is indeed the case, which it should be. So I'm going to say, let's say we're married now, married filing joint. So now Eric got married again. So we're going to go back to the forms. And so now we've got married filing joint. Eric and Jane living in Beverly Hills 90210. And it's still capped at $300, even though I put 1,000 in there. So it's still capped at the 300. Now, of course, when married, they would have to be having over 24,800 in order to be taking the itemized deductions. So the 300, if they're under that, the 300 would be beneficial. So going back over, let's say they're unmarried now. Unmarried. They're like, nah, we're not getting married. So we're say single again. And then go back on over. So there we have that. Now let's say that they're itemizing, and just to see where the charitable contributions would be if they itemize, because that's the other option. So if I go back on over and we say, okay, now I'm going to go to Schedule A. Typically, the thing that's going to push people over into itemizing will be the interest on their home and possibly the property taxes on the home, typically being the two things. So let's say they have like 10,000 in interest, and then they have charitable contributions of another, let's say 3,000 of charitable contributions. Then I'm going to uncheck this, and then you might get the benefit here on the itemized deduction. So if I go back on over, we're going to say now they've got this 16,560 instead of the 12,400 because they chose to itemize, the itemized deductions being greater than the 12,400, as we can see then on Schedule A. We'll take a look at itemized deductions in more detail later, but now that 3,000 is giving them a benefit here because it's giving a combined itemized deduction that's going above the standard deduction. Okay, so then that's going to flow over here, and we're not taking it right here, but we're instead taking it as a itemized deduction, a below the line deduction instead of the above the line deduction. And then if they were married, let's switch it on over to married. What's going to happen if they're married? Then they're no longer going to itemize because now their standard deduction is going to jump up to 24,800, and they will no longer get a benefit from it. So I'm going to just check that out because that'll be fun. So we're going to go to the client information and say that Eric's going to get married again. Eric's getting married again. So then we're going to go back on over to the forms. Eric got married. So Eric and Jane in 90210 Beverly Hills. So now we got the 24,800 because that's the standard deduction. So they're no longer itemizing. Notice Schedule A has now disappeared or has now grayed out because that amount of now the 16,625 is not greater than the standard deduction, which is now the 24,800. So in that case, we'd want to bring the charitable contribution back over here to the above the line deduction. So take it, we're going to go, all right, well then take my charitable contributions from below the line and move them above that line. Take them from below and move them above. So, and to do that, we'll just hit that checkbox, and then of the 3,000, we're only going to get 300 of it but at least we get something. So it's an above the line deduction in that way.